Between policy shifts, electrification, and changing global supply chains, automakers are under pressure to fine-tune and rethink their strategies. Some big questions are still looming. What is having the biggest influence on driving capital investments, and where is the broader industry heading next? Welcome to Navigating the Currents of Change. I'm Shaheen Chohan and I head Global Analytics at Industrial Info Resources. For over 40 years, IIR has been delivering industrial project, plant and asset data that's verified and constantly updated across over a dozen of the world's most capital-intensive energy and heavy industrial sectors. Now, joining me today are two leaders from our research team at Industrial Info Resources. We have Angela Hudson, North America Research Manager for Industrial Manufacturing, and Mike Bergen, Executive Vice President. Welcome to you both.
Thank you. Thank you.
Now, both have been researching and commenting on what capital project trends are occurring across the entire automotive supply chain. And so today we will be diving into the outlook for automakers and their suppliers in this continuously evolving landscape. So welcome to you both. Let's get started. Now, Mike, to really start the discussion, how would you size the current US automotive market in terms of volumes when it comes especially to the light vehicle space?
So Shaheen, I would put in like three categories. One would be what we see in sales, right? What's the volume of sales that we've had in vehicles? And then the other one would be what's the production of that here in the US, right? So we know that sales is a mixture of what is produced here, but then what is brought overseas. And then we also have what IR is tracking as far as the spending. I would say that our spending is really a leading indicator into higher production volumes going into the future, because it is showing how we are adapting to and manufacturing more here in the U.S. Specifically, we saw this trend with the EV market back in 2022 and 2023, where there's a lot of investment put forward by the automakers to actually build out EV capacity. And while we know that EVs are not being sold at the rate they would like them to, we've had some double-digit growth in not only production, but also in sales of electric vehicles, like the EVs alone. And then most recently, we saw actually where hybrids have actually bumped up in their volume of sales in the U.S. So ironically, when you look at the different buckets, we have the ICE vehicles, we have hybrids, and we have electric vehicles. Overall, we've grown since COVID by about 1 million units a year in sales, right, as a total. If you look at the ICE numbers, ICE vehicles have actually decreased, which means that the hybrids and electric vehicles are taking market share away from it. Now, this year, some of the leading automotive statistics out there will say that the ICE vehicle production is going to ramp up, right? So we're going to produce more ICE vehicles here and sell more ICE vehicles here than we have in the past. And that's an interesting, way of looking at the dynamics that are going on in the market, especially with tariffs around that.
Now, what do you see as, I guess, some of the biggest challenges to the automakers, and what are the issues that they're facing? Certainly in the current environment, which is an environment which started off pretty positive, right, when we came into the start of the year, but I guess has, certainly weakened and become a little bit more uncertain, certainly this midpoint.
Sure. And another way to frame this up and to articulate what we're witnessing today is the way that we track the investments for those assembly plants and the suppliers, right? And so the investments that we've witnessed over the last 5 years have actually escalated quite a bit because of the big EV push. So we went from doing about 15 to 17 billion a year that we captured in investments to on up to 50 billion in 2023. Now that's come off to about the $20 billion range. Angela could probably back me up on that one, mainly because they're starting to ramp down the build out of the electric vehicle market. Obviously, with the constraints that EVs have had in getting adoption passed through consumers, that the plans that were pretty robust during the Biden administration years that had a lot of incentive behind them are now starting to be pulled off the table and replaced with more investments into hybrids or even back into ICE vehicles to shore up some of the revenue that they're losing from electric vehicle sales right now.
So would you say that there is two different sets of trends between the pure EVs and the hybrids? Are we seeing two different types of trend occurring?
Yes. Yeah. So we were seeing a lot more of the electric vehicle sales when they first launched a couple of years ago. With the lack of charging stations and the really the duration of those batteries that could take people on longer trips, that has shifted people into wanting to contribute to the lower carbon footprint and move towards that hybrid model.
There's always been a lot of focus, I think probably over the last 24 months, and I think this has probably increased with the Trump administration coming back into office, on really trying to capitalize on domestic demand and obviously meeting that with more localized, regional production capacity, right? Are you starting to see some of the narrative that was certainly announced and presented by the incoming Trump administration around reshoring? Is reshoring gaining any kind of meaningful traction, or really is it still just kind of political talk?
Yeah. Definitely reshoring is part of this conundrum that we're in right now. Because if you look at the current constraints that are out there, it started with the adoption of electric vehicles not going the way that we intended it to go. And now we're in a new environment of constraints, which is the tariffs. And so those tariffs are causing a lot of constraints within the industry when it comes to the shoring of auto parts that come from various parts of the world. The tariffs that have been imposed on them, excluding the USMCA agreement that we have. And that has spurred several companies to come in and announce bigger projects that I'll pass that to Angela and let her get into the details of that, of what we've seen so far.
Right. There's a lot of focus, obviously, on trying to capitalize on growing and still fairly strong domestic demand, and obviously meeting this with locating and having more domestic manufacturing and production capacity here, located directly in the US. So is reshoring actually happening? Is it actually gaining traction? Or is it actually still just sort of political talk?
Yes, reshoring is happening. It's gaining traction. We're seeing that with Hyundai Motors investing $21 billion in the U.S., and this includes a $5.8 billion steel plant in Louisiana, where they're going to increase production here, so they won't have to have less relying more on their foreign steel. And as well as General Motors and Ford are looking at doing some more investing in reshoring for EV and battery plants as well.
Right.
Yeah, and I would say I think Hyundai is probably a prime example of a company that's what we would call offshoring production to the United States to manufacture the vehicle. They did open up their new facility. This is an expansion that they're going to do to that facility. But then you have the steel plant that they're investing in. So they want to control that supply chain as much as possible here and avoid the tariffs. So there are plenty of examples of companies that are coming through with reshoring plans. There's also the implementation of just bringing production back to the United States.
Right.
So we saw that with Ford talking about moving production from Mexico over to the U.S., and a couple of other automakers are moving just that production of a vehicle into a facility that has the capacity to take that on.
Right. Ford is investing $700 million in their Kentucky truck plant to boost up their investments here in the U.S., as well as Toyota building a $13 billion battery plant in North Carolina for hybrids and EV vehicles as well. So we're also seeing GM just recently announced that they're going to be investing $4 billion in their auto plants, 3 of their auto plants here in Michigan, Kansas, and Tennessee, to boost up production for ICE vehicles. So they're shifting more towards ICE vehicle production instead of EV because of the low EV sales.
Right.
And that's a great example of, Ford saying that they're going to invest another $4 or $5 billion into ICE vehicle manufacturing, and yet they're saying we're losing $4 or $5 billion for the next several years on electric vehicles.
Right.
So they got to have that ICE sales revenue to try to, make shareholders happy.
Yeah, offset some of the loss of production capacity. So, Angela, as we see more reshoring, do you think that will actually have a positive impact on job creation?
I think job creation will be limited and will be focused more on robotics. So it's going to be, with reshoring, again, these jobs are going to be more like automated with robots and less people, less jobs. Even though they say they will be increasing, though, I think it's not going to be that many jobs being created once manufacturing increases.
But also, what I would like to touch with you, Mike, because I know you have your hands in our labour analytics, is if we do see more reshoring, is there the labour construction market available out there, bearing in mind we have other big growth sectors? We've got chemicals that keeps building out, and we've got data centres that's scaling. Will we have the labour supply?
Big constraint still. And like Angela was saying, that the South is an attractive area for reshoring manufacturing here. Building those plants will be, a difficult situation because we have a lot of other stuff going on at the same time, mega projects. So that type of labor will be in short supply and have to be managed properly. So can we see more modular build type activity happen with that? You never know. It could actually come into play. And back to the robotics and things like that. That's something that in the news recently, SoftBank announced that they're going to spend $1 trillion in Texas to build out data centers, but also part of that is AI robotics for manufacturing, right? So they want to establish a proving ground for manufacturing, simulating manufacturing through robotics. And so that, I believe, is going to be in the next decade. Is it going to be tomorrow? No, but it will be coming up as the next wave of generative AI being in the manufacturing environment.
So, Mike, guys, does this mean that we're seeing a change in the mix or the composition of kind of market share of what were probably traditionally seen as the brands in the US? Are we seeing a lot of new foreign entrants coming in? So if we're seeing more of Toyota, we're seeing more Japanese, more Korean makers. Do you think that could alter the market share in terms of not only production but ultimately sales?
Absolutely. Yeah, I would definitely say Hyundai, again, going back to that example, is another company that has really made some inroads into not only improving the product, but in getting buy-in from consumers on it, but they are actually taking market share away from the big three.
Right. So who are going to be most likely to be the companies to make, I guess, the biggest investments over this sort of short to mid-term period, 3 to 5 years? Who are they going to be?
So you're still looking at Hyundai Motors expanding, as well as Toyota. Toyota Motor Company is expanding. Tremendous expanding going on here. $13 billion, again, like we said, in North Carolina. Ford and GM are still expanding. You're seeing that with, and again, Hyundai with the EV sales, I guess, battery plants in Georgia as well. That's going to be your biggest boost of selling for EVs and for more or less for investments for the future or the next 3 to 5 years.
Right.
Correct, yeah.
Yeah, and it's, going back to the discussion about EVs, and we know that the adoption rate's not there to meet expectations currently, but they have made a lot of inroads. I mean, we've gone from back in 2000 having about 200,000 vehicles sold to over 1.4 million vehicles sold, in the U.S. So they are continuing to gain market share in the overall light vehicle picture, right, which is actually reducing the amount of ICE vehicles that are being sold per year. But it's just not at that rate that they would expect.
Right. Now, Angela, in terms of the types of projects, so you're both indicating that, yes, we're going to see scaling up, we're going to see more volume. The types of projects, when you talk about adding capacity, is that coming from predominantly grassroots developments, brand new facilities?
So we're seeing a bit of both, more or less. People are building more, they're investing more by by building more, again, like I talked about with the reshoring, building more plants in the U.S., increasing production here. So a lot of them are starting with new grassroots plants, but we're also seeing some existing manufacturers here expanding and I guess they're changing the way they do things, I guess redeveloping their assembly lines to handle, EV production or, battery plants. So they're trying to refocus on what they're manufacturing here, increasing their supply chain by, okay, how can I better equip or better increase manufacturing of the vehicles or what's going on at my, what's going on with my company here, So that's what they're doing now. We're seeing a lot of that. But again, it's a little bit of both. We've seen a lot of new grassroots, but as well as with expanding existing plants that are already exist in the U.S. here.
Right. So I guess a few years ago, we saw many of the existing automakers retool their production lines to add EVs to the mix. Now it's sort of retooling to increase production volumes, mainly of the hybrids or the ICE. Is that right?
Exactly right. But they're focusing more on electric vehicles. So again, it's not just your regular engines and stuff like that they used to do in the future. So they're looking at more electric motors and stuff like that and batteries. Just
trying to get a handle on where this investment is expected to be located, looking at, I guess, some of the hot spots or where it is concentrated geographically. Where are we seeing in particular the hot spots geographically for electric vehicle manufacturing and
So we're
investment?
still looking, what's happening is that we're seeing that a lot of these auto manufacturers are looking at investing more in our southern states. So we're looking at our Georgia, Tennessee. We're seeing those states with big investments occurring there, as well as Michigan, which is still our big auto manufacturing state. So increasing reduction of EV and battery plants are going to be in those more or less for southern states. Because we're seeing that they're focusing on going to the southern states because of their cheaper land, lower labor cost, as well as reduce or less unionized workforce. So that's why they're moving towards the southern states for expanding of these different auto manufacturers locating there.
I suppose that plays into the whole reshoring, right? You're being incentivized to reshore, but you're actually bringing a lot of production from what is traditionally cheaper markets in Asia. So there is a big cost consideration there, I guess.
Right. And being closer to your key infrastructure areas, so that's why another reason why they're locating there.
Yeah, port facilities.
Exactly.
Yeah.
Yes.
Now, Angela, with a specific focus on material and components, what are some of the biggest challenges being seen by the automakers?
So what they're still doing is they're still having shortages with your raw materials and dealing with metal stamping, specifically aluminum, and as well as some plastics. So we're seeing a lot of the shortages, and with transportation delays and then getting delivered to the U.S. So we're going to see more of that occurring here.
Yeah, and of course we have the whole rare earths situation that arose during the tariffs, right, with China imposing their, really forbidding any of the rare earths coming over to the U.S. soil, Canadian soil, right? And so that caused what was seen as a lot of assembly plants had to shut down because they couldn't get certain parts in for vehicles, right? And so now we know that China has opened the door back up for manufacturers, suppliers to get back in there to get that rare earths. But ultimately, that's really about how do we reshore that, or how do we diversify that supply chain away from China and into parts like Australia or Brazil that produce the same rare earths?
Yeah. I guess, I mean, we've seen this for a number of years, certainly in the upstream mining sectors, about sort of friend-shoring. If you don't have those natural resources yourself, find a friend who does. But, we've also seen the Trump administration trying to improve and relax the mining permits, right? And some of those mines are going to be focusing on, producing, lithium, the necessary lithium for the batteries, but also I think you do have deposits of rare earths, and I think maybe some easing of what are quite strict mining permitting rules and regulations. We may see more of that upstream supply coming back into the market, which may alleviate some of the materials cost.
Yeah, certainly so. Australia has been actually incentivizing that industry specifically for them to be another source of attraction for rare earths. And so that I think is one of the best paths for the U.S. to do as it tries to build up its own supply here locally.
And we saw that with Ford Motor Company shutting down their Chicago plant in May for a week because of this shortage of the rare earths. So we did see that experience of them with it.
Well, I want to talk a little bit about you're talking about the inputs or the support facilities, and maybe we could just have a chat about the battery side of the electric vehicle market. Obviously, we're clearly seeing, with the Trump administration, the outlook from a policy support perspective to be a little less positive than what we saw with the Biden administration, right? Are we seeing any kind of knock-on effect or uncertainty creeping into the minds of the battery manufacturers? Are they still expanding in line with the broader auto market, or there is a little bit of uncertainty there? Are they pulling back?
Right. So we're still seeing increase in battery manufacturing. We have 10 new battery manufacturing plants expected to come online by the end of this year. So that's going to double your battery manufacturing capacity. Since last year and till today, over $100 billion has been spent on battery manufacturing. We expect those battery manufacturers to come online by the end of this year. Again, we don't see a slowdown with the battery manufacturers because of what's been occurring also, and also because they're shifting focus. So we're seeing a lot of manufacturers, for one, particularly we're seeing that the LG Energy is looking at redirecting what they're going to be producing at their plant. So $1.4 billion battery plant is going to come online in Michigan by the end of this year. And they're going to shift their focus from building EV battery plants to building your lithium iron phosphate batteries. And these are going to be used in your battery storage systems. And this is where your shift is going to be driving more for your battery storage system, so that's where your battery manufacturer is going to be increasing. So we don't expect a slowdown to be occurring with the battery manufacturing industry.
Right.
Yeah, that's a very interesting story because, back in the Biden era, there was the rule that said you couldn't source, material from hostile countries, China being one and China being a big producer of batteries. So that really spurred a lot of the battery manufacturing projects that we saw, come to pass there. And now that we're probably going to get out of some of those incentives that are related to the IRA, it's now about tariffs. Now we have to get away from the tariffs that could be coming from importing those batteries from other countries. And so that's a big driver behind it. And while EV production has started to, calm down, not grow as rapidly as they wanted to, those plans for those battery plants are now being shifted to manufacturing for the other sector of the industries, right? The power industry for battery storage, right? So these large battery storage sites that we're tracking in the power industry are now a big attraction to the manufacturers of those.
Right. I want to stick with tariffs again and trade. We can't have a conversation about the auto market without talking about the rapid growth, I guess, in Chinese electric vehicles. They've made, substantial inroads. They've grown market share really quite rapidly, certainly in markets like Europe, and even in my backyard in in Dubai, UAE, we're seeing a lot of Chinese EVs. So whilst that growth is occurring elsewhere, there is clearly, I would say, still fairly tense trade relations between the US and China. Do you think at any stage that China could actually, break into the US market? Could they challenge market? Could they, take some share of this market?
Yeah, BYD has been a big force out there.
That's the brand, right.
They've really expanded across the world, and now within China, they're faced with competition within, right? And so that's become quite a war in China, pricing really on EVs, that has caused some stir with the government in what they do, right? So really in a roundabout way, China is now exploding at the seams with all this EV inventory, and they're pushing it out to the global market, right? Their consumer base can't absorb everything they're producing, right? But the U.S. has a roadblock, right? We won't allow those Chinese manufactured cars to come in, which, if you're an EV manufacturer over here, you don't want them to come in because that could really hurt this market because of how low priced they are, right? So.
Well, we're still dealing with the high tariffs and national security concerns with China. So that's why the U.S. is trying to increase production here in the U.S. so they won't have to rely more on China. So I think that's still going to be an issue that we're facing here.
Yeah.
Right.
Now, they're coming up to our borders. They're down in Mexico. They're obviously, doing a lot in Latin America, Brazil. We actually do have a BYD project in California that's a joint venture to manufacture, I believe it's buses. And so that's one project. I'm not sure how it got through the back door, but it is something that we're following. Still an active project. So hopefully that won't open up to more manufacturing here.
Yeah, I guess so.
Yeah.
Look, in coming to the close of our discussion, to both of you, what do you see as the most important signal business leaders should be looking out for over the short term, the next 12 to 18 months?
I would say, for one, would be inflation, or also consumer spending, which is expected to be slowing because of the tariffs and the high increase of sales on the automotive industry, EV as well as the regular vehicles. So as sales increases, you're going to see the consumer sales slowing down.
Yeah, I think that if you look across all the automakers right now, they're all saying that they're going to raise prices on vehicles to absorb the tariffs, right? And so there has certainly been a rush. If you look at any of the like European Union countries and their GDP numbers, they all have like a trace of getting their vehicles to the U.S. market before the tariffs hit, right? So what's coming down the road is that they're going to be raising the price of the vehicles, and they're already at a higher rate than they were before COVID, right? So the average cost per vehicle is a lot higher than it was before COVID. So now we're going even higher, which is making it less affordable for many people. So that could have an impact on that auto market, in a roundabout way. On the consumer side, yeah, I mean, everybody's, got a tighter belt, because of inflation across many different sectors, but we know that inflation's going down.
Right.
And so it is stabilizing. So it could be challenging. We'll see how the last part of the year actually does pan out. Hopefully we do get some good trade deals in, and automakers don't have to impose such a big lift on prices that can keep that market strong. And of course, them investing in vehicles moving forward and not cut back on things for the consumer.
That brings us to the conclusion of this discussion. Really fascinating stuff, guys. Thank you very much. Big thanks to you both. If any of you have any further questions about any of the topics or points that we've discussed or raised today, then please do reach out to myself or Mike or Angela on the details that you can see here. And finally, a very big thanks to all of you for joining us today. I hope we have helped you all better navigate some of the currents of change that we're seeing.